What's all this business about Goldbach levels?
I'm going to break down ICT's latest trade and show you how he uses Goldbach, aka Enigma, to execute all of his strategies. In this video, I'm going to break down the trade which ICT took this morning, and I'm going to leave it to you to make up your own mind on whether ICT trades using Goldbach or not. Now, I was rereading Hoppy's book, Demystifying ICT, What Every ICT Trader Still Wants to Know, and I came across this quote, the beginning to chapter 5. So the hardest time to lie to somebody is when they're expected to be lied to. And this reminded me of a post ICT put up during the weekend where I broke down one of his trades. So first he put this post up and then he spoke about Goldbach during his live stream on the Saturday. So he basically says, no, he does not use Goldbach levels. They play no role in his analysis, nor is the algorithm using them. So there's two claims here. The first claim is he does not use Goldbach levels in his own trading. And the second claim is a more general and broader claim in that the pricing algorithm does not use Goldbach. So this is why I was reminded of this quote again. And all I ask you to do is open your mind, review the work I have put together on this channel, and then decide for yourself on whether the pricing algorithm is using Goldbach or not. Now, it's kind of interesting that I feel a bit like what ICT must have felt like when he was revealing his view on the markets, and the fact that his whole theory is that the markets are priced via an algorithm and not due to buying pressure or selling pressure. And he used to get pretty adamant and very angry that people didn't believe him. I'm taking a different philosophy. All I'm doing is I'm showing you trades that have been taken, and the easiest way for me to do this is to show you trades that ICT has taken and show you how they marry up to the Goldbach trading levels. And instead of getting angry, I will allow you to decide for yourself. This is the trade which ICT took this morning. So today is the 19th of December, Tuesday, and there we go. He took the trade on the 19th. He uploaded this 2 hours ago. So I've just had a look. And now my job is to show you what is behind the magician's curtain. So having a look at the trade, it was on NASDAQ. This is the contract, so you can pull this up yourself. And again, I'll go through everything from first principles, so you can open up the Goldbach indicator for yourself to show or to convince yourself that I'm not form fitting. And then you can decide for yourself two things. The first accusation was that Goldbach levels play no part in ICT's execution. And then the second accusation was that the algorithm, the general pricing algorithm, does not use Goldbach levels. Okay, so let's have a quick look. So he said this was a breaker. Now, keep this in mind. The hardest time to be lied to is when somebody is expected to be lied to. So this lipstick, I no longer believe. Right, so he is saying he's come in because of this breaker. I will show you what the Goldbach levels were telling us. So he came in on this breaker. He put in a market order. So as soon as it hit this level down here, he placed a market order. You know, in my trading, I like limit orders because I know the exact Goldbach levels. But I'm assuming somebody who doesn't want to reveal the Goldbach levels prefer market orders, because then there's a little bit of slippage and then you won't get his exact execution price. So he came in there. He had an arbitrary stop loss. He just kind of pulled his stop loss, set her down a little bit, and then that was his TP target. Again, arbitrary, all this pulling of standard deviations, I just urge you to keep this in mind. Okay, these are his targets. Now, he didn't actually TP here. He kind of pulled his TP and then TP'd manually, because I'm assuming he was looking for a reaction at a Goldbach level. So let me screenshot this and bring up TradingView. Here's the same contract, and these are his execution details. So he came in at around 6:30. Let me show you that. Okay, so he came in and executed around just before 6:30 a.m. Okay, so let's bring it back. So I'm on the 4-hour time frame. He's on the 1 minute. So let's bring it back to 6:30 a.m. So there's the initial consolidation. As so. Blue line was his entry. That was his expected take profit, but he did move that. So let's put that in. So he came in 6:30. So he came in here as a market order. And let's find that stop. Okay, this was his stop loss, his initial stop loss, 947. Now, a Goldbach teaching for you all. The power of 3 dealing range that's being used depends upon a number of things. One of them is volatility, how volatile the candles are. So obviously, the more volatility we have, the larger the dealing ranges will be. And the smaller the volatility, the smaller the dealing ranges. Now, if you see my last few videos, I don't think I've broken down an ICT trade for about a week now. I've been busy on other things. But when he's executing on the M1 time frame, he normally likes the 27 power of 3. However, we're in December, right just before Christmas, a week before Christmas, and the volatility is dead. So in this case, he did not use the 27 power of 3. So let's bring up our indicator. So if you want to load it from the box, it's called DMN's ICT AMD Goldbach indicator. Turn off AMD boxes. Let's turn on these dealing ranges for you guys so you can see them. Dealing range box, okay, it's already there. Fantastic. So he was actually executing on the 9 power of 3 because there's a lot less volatility now. So let it load up. There we go. Now, what did price do? Let's play it through a little bit. Now, he has multiple screens, so we don't know what's on his other screen. But if I was executing this, if I'm using the 9 power of 3, I would not be using the 1 minute. I like the 1 minute for NQ if I'm trading the 27. If I'm trading the 9, the dealing range is smaller, so the time frame is less. So this is where he came in, and this is where he was supposed to TP, but he TP'd somewhere else. That was his ultimate target, I guess. Dropping down to the 30-second, what do we have here? So ICT did say he came in. He said he came in because of this breaker block here on the M1. This is the 30-second now. Now, remember what I said. The hardest time to be lied to is when you expect to be lied. So ignore the fact that he's pointing out this breaker. It's smoke and mirrors. You see my analysis enough now. You understand when he comes in and when he doesn't. So the first interesting point is, if we play the candles through a little bit, wow, what did it reject off of? Which level? The fair value gap, GB level. Now, he made the accusation that the algorithm does not look at Goldbach levels. So let's look at this. We're on a 30-second chart. We have a fair value gap in the fair value gap GB level. Let's get the exact price. Can you see that? Now, price didn't actually hit the visible fair value gap, but what did it do? Let's bring up the price tool. There's the price of the bottom of the wick. This is the price, the top of the GB level for the fair value gap, as predicted by Goldbach. So what did price do? It came down exactly to the fair value gap GB level, where there is a physical fair value gap, but it did not fill that physical fair value gap. It repelled off the fair value gap GB level. Given this, the fact that it rejected so violently, there was support here. Given this, do you think the algorithm is referencing these levels or not? Further evidence. See these candles here? 1, 2. What is the price of EQ? The exact same price. Do you think, from what you've seen today and on my channel, do you think that the algorithm references Goldbach levels? Yes or no? Okay. If you think the algorithm does reference Goldbach levels, do you think ICT would be aware of them? Because he's obviously aware of Goldbach levels, because he said, for those inquiring in the comment section, no, I do not employ Goldbach levels. So he's at least aware of what Goldbach levels are. Now, if the algorithm is referencing these Goldbach levels and you have volatile reactions from them, and ICT is supposed to be the person who knows the most about the algorithm, would he not use this information to trade? So he told us he came in because of this breaker block on the M1. Okay, so even if you look at, I don't know, the mean threshold of the breaker, what was more respected, the mean threshold of the breaker which ICT came in on the M1, or the fair value gap GB level? You tell me. Now, where was his stop loss? Let's check this. 16947. Let's double check that I put that in the stop. 19647. And what does that marry with? The low of the GB range. The low of the dealing range. Is this a coincidence? Is it a coincidence that ICT put his stop exactly at the low of the dealing range? And thus, is it just a coincidence and he doesn't actually know that the algorithm references Goldbach and he doesn't reference Goldbach? Look at this sensitivity here. Right? Now, where did he TP? It was a bit of a floating TP, but he was probably targeting either the high or the extension. So he put it out here to get a little bit more, and then he ended up moving his take profit. I think he either deleted his take profit and then came in later. So let's find out where he actually TP'd in the end. So ignore these sleight of hand tricks where he projects things. That's irrelevant. So that was his initial take profit target. Okay, there. But you'll see he moves his TP. Now, I've only seen this video once. So what did he do? Okay, the TP has disappeared. I don't know what happened to it, but he's got his line there. And where did he TP? So he's not TP'd because he got rid of his TP. So he's still in the trade and moving his stop. So he TP'd here. So he let it go past and then he thought that's enough. So you have the evidence. You have my whole YouTube channel. Let's go back to the stated claim. The claim is, firstly, that the algorithm does not employ Goldbach levels. the way this price action was, do you think the algorithm references the Goldbach levels or not? And the second thing was, he does not use Goldbach levels for his trading. Given what you've seen, do you think he came in because of this breaker block, and then he had his stop loss at the exact low of the dealing range because of this breaker block? Or do you think he saw a reaction coming off of the fair value gap, or the target was the fair value gap and he executed a market order, and then he looked to TP at the other side of the dealing range? Let me know in the comments below. I am not trading for the rest of the year. December is typically low volatility, and especially now, a week before Christmas, there's not going to be much price action. So this is the time to sharpen your tools, really become the best trader that you can be, backtest, read up on mindset and psychology. If you would like to learn more about Goldbach, this is a great opportunity to get yourself a copy of the book. There's a link to Hoppy's official book on Goldbach in the description below. And if you would like me to teach you my golden bullet strategy, there's also a link to my mentorship program. Have an amazing Christmas. I'm not sure if I'm going to post again until next year. But let's see. If ICT trades again and I have some free time, I may provide more evidence. Hope you enjoyed this video. And until next time, please keep an open mind.